Welcome to the Coastal Lowcountry Real Estate Channel. Are you looking to move to the Georgia-South Carolina Lowcountry and are looking for more creative ways to finance the purchase of your new home? For the last several years, it seems that the talking heads on TV have made it their personal mission to report on how unaffordable housing is today. High home prices and interest rates have created the perfect storm that may have put homeownership out of reach for some home buyers. However, there are ways to finance the purchase of that new home and possibly reduce your interest rate, lower the cost to finance your home, or buy you the time you need to perfect that perfect dream home. There are multiple reasons that you may want to purchase your new home without going through the traditional lending process. Today, we're going to explore 3 creative financing scenarios that you may be able to use to purchase your new home.
Welcome to the Georgia-South Carolina Lowcountry. We're Keith and Donna Hellman, hosts of the Coastal Lowcountry Real Estate Channel and local realtors with Keller Williams. Do you want to know everything there is to know about living in the Lowcountry? Whether it's Savannah, Georgia, Hilton Head, South Carolina, Bluffton, South Carolina, or the surrounding areas? Well then subscribe below and tap the bell for notifications so that you'll be the first to know what's going on in our market.
And we receive calls, emails, and texts every day from folks just like you looking to move to Hilton Head, Bluffton, and Savannah areas. And we absolutely love serving you.
So whether you're looking to move in the next week, the next month, or the next year, shoot us a text, send us an email, give us a call, or schedule a Zoom call, all in the description below so that we can help make your move to the Lowcountry a smooth one. Hey, Let's get started.
Welcome to February in Savannah. It's going to be 72 degrees today, and it is an absolutely beautiful day. Too beautiful to be inside, so we decided to take this video outside. Let's get into those 3 creative financing scenarios. First up, we're going to explore a creative way to get a below-market interest rate on your mortgage. The National Association of Realtors recently reported that in 2021, when interest rates on a 30-year fixed mortgage hovered around 3%, that 80% of the homes purchased were financed. 2 years later, in 2023, when interest rates were between 6 and 7%, only 80% of the homes purchased were financed. Do you know that it's still possible to get a mortgage around 3%? This can be done through an assumable mortgage when you purchase that home and assume the loan of the previous owner. So how does this work? As mentioned, the buyer literally takes over the seller's existing mortgage, including its interest rate, repayment period, current principal balance, and other terms, rather than securing a new loan to purchase the property. This approach can offer advantages to the buyer, such as potentially more favorable terms compared to obtaining a new mortgage. However, it's important to weigh various factors and pros and cons before purchasing or pursuing an assumable mortgage. For example, as mentioned above, one of the advantages for the buyer is that you can lock into a mortgage rate that is much lower than the current rates, resulting in significant monthly savings. So, on a $300,000 30-year mortgage at 7%, your monthly installment would be $1,996. Using that same mortgage at 3% would result in a monthly payment of $1,264, a savings of $732 a month. Over the life of a loan, that can save you almost $250,000. Another advantage for buyers would be that assuming a mortgage often bypasses the need for an appraisal, simplifying the closing process and potentially saving an additional hundreds of dollars. Disadvantages to the buyer include having to still apply for the loan and meet the lender's requirements. So this limits your choice of lenders. Also, the desirability of the home due to the assumable mortgage might lead to an increased demand as well as a potentially higher purchase price. Another big disadvantage may require having to compensate the seller for any substantial home equity. So, if the mortgage being assumed on the home is $200,000 and the value of the home has increased to $300,000, the buyer would be expected to compensate the seller for the difference of $100,000 in the form of a significant down payment. Additionally, This option is only available for certain types of loans, specifically FHA, VA, and USDA mortgages. Conventional loans are generally not assumable, except under specific circumstances. But if you can jump through these hurdles, you can save yourself some significant cash. Next, we are going to explore ways to finance the purchase of your home if you have less than desirable credit by using owner or seller financing. Obtaining a mortgage is a customary route for home financing, but not all potential home buyers can meet its rigid criteria. As a result, owner financing provides an alternative to purchase that new home. Owner financing is a real estate arrangement where the property owner finances the purchase of the home for the buyer. In this scenario, the traditional mortgage lenders and buyers are bypassed and the seller, in essence, becomes the bank. The seller extends credit to cover the home's purchase price, deducting any down payment. Subsequently, the buyer makes periodic payments to the seller until the total amount is settled. A promissory note spells out the loan terms, the interest rate, repayment schedule, and any default consequences. Owner financing arrangements frequently entail short-term loans with modest monthly payments, often spanning 30 years, but culminating in a final balloon payment after 5 or 10 years. This setup anticipates the buyer's increased equity or financial standing to qualify for a mortgage. Some of the advantages for buyers include expedited closing without delays associated with traditional bank processes, as well as lower closing costs usually charged by the banks, such as fees or appraisal expenses. Buyers may also be able to negotiate a flexible down payment option. This is a great solution for buyers who may be challenged securing conventional financing because of less than perfect credit. Some of the disadvantages can include higher than normal interest rates compared to conventional bank loans, as well as sizable balloon payments upon agreement expiration, potentially leading to a financial loss. Also, if a mortgage exists and the seller does not pay it off prior to closing, the buyer will need to ensure that the lender approves of the sale. The ownership structure and financial obligations vary depending on the agreement's specifics. Often the seller retains deed until full payment is received, either through the buyer's final installment or refinancing from an alternate lender. Property taxes and insurance payments typically fall under the buyer's responsibility in owner finance deals, contrasting that with mortgage mortgage arrangements, where the expenses are commonly integrated into the monthly payments. However, this too can be negotiated. Engaging a qualified real estate attorney for contract negotiations and review is advisable for safeguarding both parties' interests. What if you need more time to build up that nest egg for the down payment or get your financial house in order before going to the bank to get the mortgage? Lease to own might be the solution. So, how does lease to own work? The lease to own arrangement is where the individual leases a property initially with the opportunity to buy it at the end of the lease period. By entering into such an agreement, individuals buy themselves time to gather the necessary funds and secure the mortgage approval. This setup provides the flexibility to defer purchase until financially feasible, ensuring eventual ownership without immediate financial strain. In a lease-to-own agreement, tenants typically pay a slightly higher rent than a traditional lease, as a portion of the monthly payment goes towards the down payment and eventual purchase. At lease end, tenants have the option or obligation to buy the property, facilitated by the rent credits accumulated over the lease term. Lease-to-own arrangements benefit sellers by generating income, offering competitive advantages, and ensuring property maintenance. Buyers benefit from interest-free financing, time to improve credit, and build up money towards a down payment, as well as a pre-agreed purchase price. Buyers, however, must contend with remaining as tenants until purchase, or the possibility of a failed agreement. So now that we've gone through these creative financing scenarios, you may ask the question, how do I find homes for sale that will allow me to take advantage of one of these options? This also can be tricky. In today's seller's market, these arrangements are not very common. For example, out of almost 1,200 homes for sale in the Savannah area, only 9 were listed allowing these financing options. 5 sellers said that they would be open to having their loan assumed. 3 were open to a lease purchase option, and only 1 offered seller financing. However, in a buyer's market, sellers may become more creative in selling their home. Regardless of the market, these are tools that a potential buyer might be able to use in negotiating the purchase of their next home. Of course, it's up to the seller to decide whether they want to enter into one of these arrangements, but it doesn't hurt to ask. Thank you so much for staying with us to the end of the video. We hope this gives you a little insight into alternative ways to finance your next home purchase. We also hope that you found this helpful and maybe even learned something new. And if you want to stay up to date on the latest of what's happening in the Georgia, South Carolina coastal lowcountry area, please be sure to like, subscribe, and tap the bell for notifications so you'll be the first to know what's going on in the current market here. And if a lowcountry looks like a place where you would like to call home, give us a call, shoot us a text, send us an email, or book a Zoom call, all in the description below. Again, this is Keith and Donna Hellman, hosts of the Coastal Lowcountry Real Estate Channel and local realtors, and it has been an absolute pleasure, as always, spending time again with you today.